Good morning. Good morning, ladies and gentlemen. What's up, traders? What is going on? Welcome back and happy Taco Tuesday. How's everybody doing today? Hopefully you guys are feeling great. Really hope you guys had a wonderful and blessed evening. I hope you guys are all fired up, ready to rock and roll for today, because today, I smell opportunity, guys. I do. Right, we had PPI data released this morning, really good data, market reacting positively to the upside and putting us into some pretty key levels. So I'm very optimistic for today. I think today's going to be a really good day in the market, and I'm looking forward to taking advantage of it. So before we dive into the pre-market rundown, hit me with a big old good morning if you are inside a chat, and if you're in the Zoom and you're feeling up to it, open the mic and hit everybody with a big old good morning as well.
Good morning.
Good morning, Julie. She's always bringing the heat. I tell you, the good mornings are better than mine. They are. And then what's happening, everybody else inside of chat? Tom, Zach, Jonathan, Andy, and Steve, and Don, Patrick, Kevin, Stir, Corey, good morning. Ladies and gentlemen, let's dive right into it. Let's talk about what we got going on for today and get you guys prepared for an amazing session. All right, so as you guys know, we had PPI data this morning. All right, so if anybody's coming into the market today like, why the heck did the Qs just rip 3 points to the upside? Why did the SPY rip like 2 points to the upside? Well, this morning, guys, we had PPI data. That is Producer Price Index, okay? And so data came in a lot better than expected. So if you look at core PPI month over month, we came in at 0%. We were forecasted to come in at 0.2%. So nicely under the forecast there, core PPI month over month, right? Then take a look at PPI month over month. We came in at 0.1%. We were forecasted to come in at 0.2%. So again, lower than the forecast, see inflation cooling. And like Tom said this morning, 50 basis points in September. I definitely agree. We do still have more key data here tomorrow, guys. Okay, so be mindful that tomorrow we have CPI data being released. Okay, but today we are pretty much in the clear. All of that data is now out of the way. The only other thing that we have coming up today at 1:15 is Fed Bostic speaking. Now, why is that important? Probably because he's going to make comments around inflation, PPI today, the Fed, anything that this guy says. The market could react to it. We've seen it before where a Fed member comes out, says something, the market dumps, and it's like, what? Like, he doesn't have any voting rights. Like, why is the market reacting to this guy? So just be mindful of that. On a day like today, it's very possible that, the remarks that he gives it could move the market. And that's going to be at 115 today. So go ahead and just get that marked up and be mindful of that. But other than that, guys, we are in the clear for today's session. So right to the SPY. Let's talk about what we got going on for today. Get you guys prepared and build some game plans, baby. So first thing that I want you guys to do is mark up this gap, okay? Same gap we had yesterday. We're not changing a thing. So we have this big gap here from the low of day on August 1st to the high of day on August 2nd. Use those 2 points, create yourself a gap. And then you even have a smaller little gap from the low of day on July 25th to the high of day on August 2nd. A teeny weeny gap inside of this bigger gap. So that's another area that I definitely want to keep on watch as well. So looking at the bigger gap, the bottom end of that bigger gap is at 537. Right? And the top end of that gap is at 539.44. And then we have this wee little teeny gap. Okay, bottom end, 537. Top end, 537.46. And just go ahead and note that your 20 EMA is also sitting right at the top end of that teeny weeny gap. So you already have another layer of resistance off that 20 EMA that lines up with that smaller gap here on the SPY. Okay, and again, the 20 EMA is a really nice moving level of support and resistance, right? When we're above the 20 EMA, we pull back and touch it, we typically bounce. When we get below the 20 EMA and touch it, we usually drop on off. We get above it, it's support. We get below it, most of the time it holds as resistance. So that's something else to be mindful of today is that 20 EMA is sitting right there up against that smaller little gap on the SPY. And then the last thing that you guys could do as well, and we did this yesterday, is we took a fib extension from that swing high to that swing low, and we drug it back up to that swing high, and we even had more confluence based on that 38.2 fib extension. That lines up with the 20 EMA, and that lines up with that teeny gap. So I really want to watch the SPY today inside of that teeny weeny little gap between 537 to 537.46. And if we see the SPY come up into that teeny weeny gap, and we can't break higher, I want to get short. And that's the same exact thing we saw yesterday, right, with the Qs, right? I'm going to show you. We have a bigger gap on the Qs, and we have a smaller gap inside the bigger gap. And that was the gap that we actually filled yesterday on QQQ before seeing a very nice rejection. So there was that gap here on the Qs, right, that bigger gap on QQQ. The top end is at 455.98. The bottom end is at 453.58. And then you have this smaller gap right here. The top end of that smaller gap is at 454.19. And the bottom end is still at 453.58. And look what the Qs did yesterday. We came inside of that little teeny weeny gap and we got rejected hard. So that's why I want to watch the SPY today inside of that little gap. If we come up and fill that little gap and we fall outside of it, we could get rejected pretty hard. Now, apply that where the SPY would be, right, inside that teeny gap. And let's go take a look at the Qs and get an idea of, hey, where could the Qs be when the SPY is filling that teeny gap? And where the Qs would be is the top end of its gap, right? So that bigger gap that we have here on QQQ, right? So from the bottom end at 453.58 to the top end at 455.98, right? The Qs would most likely be right at the top end of this daily gap, while the SPY is right here inside of this smaller gap, inside the bigger gap. So if those two things are lining up at market open, and we see the SPY fill that smaller gap and get rejected, and we see the Qs filling that bigger gap and getting rejected, that could mean that we have some really nice short opportunity right at the start of the day, because both the SPY and the Qs are filling some gaps, and we could see what? A gap fill rejection on both the SPY and the Qs. Based on their location, they would be setting up and lining up pretty closely off those gap levels. So that's going to be the first plan today, right? Is, do we see the SPY open, push up, and fill that smaller gap? Meanwhile, are the Qs filling that larger gap, right? If we see that taking place, we basically just want to see, does price action validate an entry? Are we seeing the start of that gap fill rejection? If so, let's get short on QQQ from 455.98 back down to the bottom end of this gap at 453.58. And if the SPY is filling that teeny gap at the same time at 537.46, let's look for a gap filled rejection on the SPY and look to play that short. Where to? I would say first target realistically back into yesterday's high a day would be your first target here on the SPY. And as far as any kind of like lower targets, I would really just look at some of these previous day levels, right? So we come up on the SPY, we fill that gap and get rejected. First target would be yesterday's high a day. If we proceed to move lower, second target would go ahead and be Friday's high a day. And then we may be able to see it come all the way down into this daily zone of support. And our next key daily zone of support here on the SPY is down between 530.97 to 531.28, right? So that's going to be game plan number one on the SPY. Are we filling that gap? Do we see the start of a rejection? Our extra bit of confluence will be, is the Qs also filling the gap and starting to see, right, an opportunity to play it short for a gap fill rejection? If that's what we see on the SPY, again, I'm willing to take the SPY short right at the start of the day for a possible gap fill rejection. Again, first target, yesterday's high a day. Second target, Friday's high a day. Then all the way back down towards around the low 531s into that daily zone of support, okay? But if the SPY does not fill that teeny gap, okay, and get rejected, what could we do? We may see a break inside of the gap, the bigger gap, pull back and hold the lower end of that gap as support at 537. If that's what we see taking place on the SPY, what's most likely happening with QQQ? QQQ at that point in time would most likely, give me 1 second, be breaking the top end of this daily gap, right? And what do we know about the gap levels, right? If we break the top end of that gap and pull back, we could absolutely hold it as support. And if the SPY is breaking inside of the bigger gap and holding the bottom end as support, what could we see? Well, the SPY could definitely push on up and fill the gap completely. What could the Qs do? The Qs could push off the top end of that gap and fill this gap into the candle body. So if you look at the Qs on the daily, our gap is being ran from lower shadow to upper shadow, right? But if we see the Qs breaking the top end of this initial gap and holding it as support, what could the Qs do? Push up and fill the gap into the candle body, right? Which is also up against the 20 EMA. And so what could the SPY be doing? The SPY could be looking for a gap fill long, where we break inside the gap, hold the bottom end as support. We can get long for a gap fill long opportunity up to 539.44. And if we see that shaping up and playing out on the SPY, what are the Qs most likely going to be doing? Most likely, not a guarantee, but most likely breaking the top end of that initial daily gap, maybe holding that as support and then pushing up into a candle body gap fill. So, I mean, there's a lot of opportunity looking at the SPY and the Qs. And so I definitely want to go back and forth today and make sure we're watching both the SPY and the Qs to see, hey, how are these things setting up? But that's going to be a second game plan here on the SPY for today, is if we break 537 and hold 537 as key support and we see the opportunity to get long for a gap fill long, let's get long for a gap fill long up to that 539.44. And if we ever see the SPY filling that gap completely, right, we may see a nice little gap fill rejection opportunity. So that's going to be your third game plan for today. All right, so on the SPY, once again, to break this down, we got 3 plans. Little gap fill rejection, we're looking to play that short. If we break inside the gap and hold all of that as support, right, we're looking to get long for a gap fill long up to 539.44. And if we ever see the SPY filling this gap up at 539.44, we would be looking to get short for a possible gap fill rejection here on the SPY. Okay, so really, the main areas that I want you watching today is that little gap, that bigger gap, and then this lower zone of support down around 531. Those are the most important, most significant areas to keep on watch right at the start of the day. And we have some nice game plans established around these key levels. So you guys are all set with the SPY. Now let's go back over to QQQ and really talk about what we got going on. And again, for me today, it depends on what do I see with the SPY as well. Okay, but if we see the SPY filling that gap and getting rejected, the Qs could be filling this daily gap at 455.98, and we could see a rejection as well. So game plan number one, if the Qs open, push up to the top end of the gap, and we see good price action, validating a short, let's get short. Where to? Back down to 453.58 would be the lower end of that daily gap. That's going to be game plan number one. Right? Game plan number two on the Qs is going to be, let's say the SPY just pulls back at the start of the day, and the Qs start to pull back, excuse me, at the start of the day. And we come down into that little teeny gap, right? And we hold the bigger gap, the bottom part as support, right? As long as we see this holding 453.58 as good support today, we could trade it long off the bottom end of the gap up to the top end of the gap. That would be game plan number two here on QQQ. And the third and final game plan is going to be if we see the Qs breaking through the top end of the gap at 455.98. And if we see that taking place, what's the SPY most likely doing? Breaking the bottom end of its gap, pulling back and holding the bottom end of its gap as potential support. Meanwhile, it's most likely possible that you see the Qs breaking the top end of its gap and holding that as support. And if we see that take place, I would definitely get long on the Qs up to this little area right here between 459.62 to 459.83, which would be, right, the candle body before that gap down. And that's where we could see the gap get filled, is into the body before we see the rejection. Okay, so that's another game plan and another trade idea for today. If we see the Qs breaking that 455.98 and holding it as support, I would get long, because at the same time, it's very, very possible that the SPY is inside of its gap, looking to fill its gap from wick to wick. We could see the Qs push on up and fill this gap into that candle body. Okay? Now, there's a lot that we talked about. I get it. A lot with the SPY, a lot with the Qs, kind of bringing these two together based on location, what we could see, and utilizing both of these together as confluences today to make sure we find ourselves on the right side of the trade. So if you guys have any questions whatsoever about the SPY game plans, the QQQ game plans, and how we're looking to really just analyze both of these today together as an extra layer of confluence to make sure we're on the right side of the trade, just ask any questions you have, and I'll be able to answer those for you. But you guys should be all set, ready to rock and roll for today. We got 3 solid game plans established on the SPY, and we got 3 solid game plans established here on QQQ as well. Now, let the market open. Let the market come to us, provide us with an A+ opportunity, and let's go from there, guys. All right? Other than that, we got Apple on watch today. Yesterday was a bit of a gap fill rejection, right? Apple actually came up and filled the gap into the body before getting that pretty strong rejection on down. But I still think there could be some opportunity today here on Apple. So what I'm looking at is the top end of that gap that we filled yesterday. And it's not only just the top end of a gap, it's also a previous level of support resistance. So go back and look here where we hit that level several times as resistance before dropping on off. Then we broke through it, held it as support, and then pushed strong to the upside just to hold below it here a few times, right, as resistance. And then, hey, it just so happened to be the top end of the gap that we hit yesterday before seeing that rejection. So not only is it the top end of that gap, it's also a previous level of resistance that can remain strong resistance, okay? And we could look for a short off that zone of resistance today, and that zone is between 218.70 to 219.12. Not only is it the top end of the gap, not only is it a pretty decent level of daily resistance, it's also going to be 0.3 of this multi-month downtrend. So here's 0.1, you dropped. Pushed on up, hit a 0.2, big drop. You're pushing back up into all of that resistance and 0.3 of this downtrend. That could lead to a nice little drop on off today. All right, and we have confluence with 0.3 of that trend line and that zone of resistance. So I want to keep that area on watch today and just kind of see how Apple reacts off all of this overhead resistance and see, do we have an opportunity to take a trade short on Apple today? And again, that key zone that I'm watching is between 218.70 to 219.12. So I want to keep Apple on watch for a possible day trade. And honestly, if this sets up beautifully and we get that reaction and we see some follow through, this day trade could turn in to a really nice swing trade as well. So with that being said, just make sure you're getting positioned correctly, buying yourself time on those contracts, securing some profit intraday if we get that move to get to a risk-free position on the remaining position that you have. And then you could hold that freely as a swing trade with little to no risk if done correctly. That's where my head is with Apple, and let's see if it sets up for us today. All right, other than that, same thing as yesterday, Amazon for the gap fill. So if Amazon ever breaks above 168.81, we could fill the gap up towards around 176.79. The only thing that I don't like about Amazon is the fact that the 200-day moving average is like $1 above the bottom end of the gap, right? So the 200 SMA is like right here at like 169.61, okay? And we know that the 200 SMA likes to be respected as pretty strong resistance and support when we're above it. So that's the only downfall with Amazon. Like even if it does break 168.81 and hold it and confirm a long, you got a lot of resistance $1 away off that 200-day moving average at 169.61. So that's the only concern I have. It's not like we just have a clear opening all the way up to 176.79. We're going to have a lot of resistance up at that 200-day moving average. So just be mindful of that. If you get long on Amazon inside of the gap, just know that you got to take some profit here if you see resistance. And at that time, move stops to break even just in case this fails. But hey, maybe we can push above that level. Maybe we can hold it as support. Maybe we can see Amazon continue to rip and run to the upside and fill that gap. It's possible. But just be mindful of the 200 SMA. Be willing to take profit there if you see it struggling. And when you do that, just move stops to break even in case we see the rejection and the gap doesn't get filled. So just tread lightly, be very mindful of that, and just make sure you're positioned correctly and you have a proper plan in place here on Amazon. But that's the one reason I don't like it, and that's probably the reason why I'm not willing to trade it today. And then lastly, we got JP Morgan, baby. JPM. I'm like, 60-40 with it. I think there could be a little bit of opportunity here. Tread lightly with this, but it's definitely worth watching, in my opinion. So I want to watch JP Morgan, ticker JPM, off this zone of resistance and the top end of this daily gap. So we got the zone of resistance between 207.93 to 208.11. And that also just so happens to be, right, the top end of this daily gap. So I'm actually going to readjust that zone, and I'm going to give it to you again. So the zone of resistance is between 207.96 to 208.10. That's the zone of resistance. And the bottom end, the top end of this gap is at 207.96. So if we see JP Morgan today coming up and we fill the gap, we could also see a nice rejection off all of that daily resistance. Not only see a nice little reversal off all of that daily resistance, but maybe see a gap fill rejection opportunity to look to play JP Morgan short today for a possible gap fill rejection. Where would I look to short this back down to? I'm really going to be looking at this area right here on JP Morgan. Okay, it's going to be August 1st low of day, last Friday's high of day, and then yesterday's open. So that zone between 206.37 to 206.48 would be your first target here on JP Morgan. So again, looking for possible shorts up around 208. Right, top into that daily gap and that daily zone of resistance. And if we see the opportunity to get short, I would be willing to short this down towards around 206.50 for about $1.50 of opportunity to the downside on JP Morgan. So I want to keep that one on watch today as well. All right, so JP Morgan on watch, possible little gap fill rejection to the short side. Amazon on watch for maybe a gap fill long. Just be mindful of where that 200-day moving average is and build a proper plan around that. Apple for a possible rejection off that monthly downtrend as well as that daily zone of resistance. And then other than that, you guys are all set ready to rock here with the SPY and the Qs. And I don't know about you guys, but when I look at the SPY and I look at the Qs and I build those plans, and then I look at these other stocks that have some potential, Apple, Amazon, I like the SPY and the Qs so much more. We're just at some really key significant levels, both the SPY and the Qs simultaneously at the same time. I like that. I like the location. I like that we're inside of these gaps. I see a lot of great opportunity today with just the SPY and the Qs. So 95% of my focus remains on the SPY and the Qs for today, guys. All right. We got about 6 minutes till market open. You guys have any questions whatsoever, open the mic, get me involved, or type it up inside of chats. We'll get those questions answered. We'll review any stocks you have on your watch list just to, again, make sure you guys are all set and prepared for today.
Good morning.
Good morning, Tom. How you doing, man?
Good, yourself?
Phenomenal.
Real quick question on the Qs. I'm
Yes,
looking
sir.
at the daily chart and looking at the candle, the way it closed yesterday.
Okay.
And I'm looking at the shape of that candle. Does that tell you anything based on what it looks like?
Just the candle alone without looking at like volume or location, not a lot.
Okay.
But if this was at a significant level of, say, resistance with a increase in volume, that could be looked at like a spinning top doji formation, where, again,
Right.
you had equal buyers, equal sellers. And again, there was just that 50-50 battle with increased volume. That could be a light indication of a possible reversal when you see like those spinning tops, or you can see like little spinning bottoms if they happen at the bottom of downtrends. And it's an idea and a slight indication that you could see a reversal. But just a standalone spinning top, not looking at volume, not looking at location, it's just 50-50. There's no real clear sign or probabilities that suggest we could see a move down. So yesterday, did that take place at a key level? It did. Yeah, that gap level, but the volume was not there. So I don't really put a lot of focus and emphasis on that candle because yesterday was a very low, choppy day on low volume. I don't think it's going to be a strong enough candle formation that leads to any kind of like reversal. Just
Okay.
based
'Cause I was
on
looking
those
at,
two things.
the last 5 trading days. If you look at that chart, the volume has been decreasing every single day.
It has.
I didn't know if that might be indicative, looking at that spinning top, that it may point to I'm looking downside because you're looking at decreased volume and the reaction to that candle for the day.
100%. Now, if we were going to be seeing an open near yesterday's open and close or a slight gap down, all right, now we're talking, right? Decreased volume push into resistance. Now we're going to be gapping down today, and then we could see the increase in volume to the downside. Okay, I'm interested. Definitely going to keep that idea on watch. But I look at the Qs, we're going to be gapping up today, above yesterday's high a day. That doesn't really show signs of any kind of reversal based on that candle, based on how today's daily candle would be opening. So even though we have that decreased volume into some resistance and we see that spinning top, we know that we're going to gap up today. And so that really just invalidates yesterday's candle based on how we're going to be opening today, in my opinion.
Okay, thanks.
Wouldn't that decreased volume be specifically because it's right before data release anyway, for the most part, Just kind of slows the market down a little
volume as a whole?
bit.
Yeah, 100%. Like, we know the day before key data, what do we get? Very, very choppy intraday market conditions, not a lot of movement, and pretty low volume. So that's very normal. So today we should see an uptick in volume just based on data, based on some of the movement we have here in pre-market. You would expect to see an uptick in volume today through tomorrow and the rest of this week because we have even more key data. But for the simple fact we know the Qs are going to be opening above 456, right? That's just not what you really want to see based on that potential little spinning top doji that would suggest a reversal. Unless today is like one big bearish candle, like maybe one big bearish engulfing candle right back through yesterday's candle. Okay, then maybe there's something to look at based on yesterday's candle. But we have to see how we close on out today.
Right.
But right now, I mean, the Qs are fighting that 455.98. If we snap above it, hold it as support, I mean, the Qs could fill the gap into that candle body from August 1st. That puts you up around, the high 459s, like right around 459.60. And then again, we know what the SPY has potential to do as well. The SPY has potential to break inside of that bigger daily gap, hold the bottom in, and then push on up to fill the daily gap at 539.44. So that's what I want to see happen. There's really just two game plans for the start of the day. Are the Qs going to be breaking the top end of the gap, holding it as support, and then pushing? If so, most likely the SPY will be breaking inside of the gap, holding the lower end of support, and then pushing to the upside. If we see these two things lining up pretty much to the T, I would feel confident to start getting long on those opportunities. But
you consider the SPY inside the gap above that candle body? Right?
No, I'm looking at the wicks personally. It's
Oh,
wick
okay.
to wick until we see the wicks invalidated. Then we start looking at body to body. But I still see some pretty good reasoning to leave it at wick to wick personally. And so the
Okay,
bottom
so
end of this
then you
gap
don't-
is off that wick, not the body.
Gotcha.
And so the other thing is, if we see the Qs opening, but we're not pushing above the top end of that gap, and let's say we have a strong rejection back inside the gap, retest it with a lower high and start to look like we're going to flush, what could the SPY be doing? Getting rejected off that teenier gap right there between 537 and 537.46. So if both of those two things line up, I'm very, very confident and pretty interested to get short on the SPY at that point in time. But market's open. Let's go ahead and get those scanners live. Let's go ahead and clean these charts up, flip to a 1 minute, and grab some hedge pressures here.